Hello, ladies and gentlemen. Welcome again. This is Sanford Khan, sometimes known as the Rogue Meister. But in reality, I'm an economic consultant and business author. The title of this lesson, Rogue Lesson, is lesson number 4. When will the stock market bubble burst or pop? I can't tell you the date. I can't tell you the date, and I can't tell you what number. But I can tell you what to look at that you probably haven't been introduced to, that your stockbroker, your financial consultant, advisor, registered investment advisor probably has not told you. The traditional measures that I have used before don't work now, mainly because the Fed has artificially kept interest rates very low, close to zero, very low. So they don't work. The traditional measures that I've used before was the Buffett indicator, total market cap to GDP, and the Shiller price earning ratio. By the way, just as a note, the Shiller price earning ratio, it's an average of going back 10 years, is now higher than the peak was in 1929 when the bubble burst then. It's well above it. But anyways, it doesn't work. So what works, or what could give you an indication that this bubble, stock market bubble, financial bubble, as reflected in stock prices, is probably coming to an end? This is what you should look for. And when this happens, and it's getting close, maybe you should take some chips off the table like you do when you're playing craps or playing blackjack or whatever, and you're ahead of the game. Take some chips off. You won't go broke taking a profit. Believe me, you pay your taxes, but you won't go broke taking a profit. This is what you should look for. And it's very simple. I'm going to get my glasses here because I got to read something. When the yield on the dividend yield on the S&P 500 is equal to or very close to the yield on the 10-year Treasury note, the market is coming to an end. The bubble is probably in a vicinity where it's coming to an end. You would expect, since stocks are riskier than treasuries, 10-year Treasury in this case, you would expect the dividend yield on the S&P 500, which represents the market, to be higher than the yield on the 10-year Treasury, because 10-year Treasury is almost risk-free. Well, when they come very close to each other or at each other, that tells you that this thing has gone too far. It's coming to an end. So where are we now? This is something you could keep track of. Your stockbroker may have the numbers, or you can get them from the Wall Street Journal or from the internet. I'm talking about Tuesday, February 16th. By the way, today, Tuesday, February 16th, the 10-year Treasury leaped in yield 0.1%, 0.10. That in one day move, 0.1% on a 10-year Treasury move in one day is big, very big. They're looking out and they're probably seeing inflation down the road. Anyways, as of this date, Tuesday, February 16th, the yield on the 10-year Treasury note is 1.3%. The dividend yield on the S&P 500 is 1.49%. You have a spread of 0.19%, almost 0.2%. So the dividend yield on the S&P 500 is still higher than that of the 10-year Treasury, but not much. It used to be much higher. But the yield difference is narrowing. And if you watch this spread, as it narrows more and more and more, where they come pretty close to being equal to each other, that's telling you that this market is really toppy. It's in outer space. You would not expect the dividend yield on the S&P 500 to be lower than the 10-year Treasury. It should be higher, actually much higher. So when this thing comes very close to the yield on the 10-year Treasury, the dividend yield on the S&P 500 comes close to the yield on the on the yield on the 10-year Treasury, the game's coming close to being over. And maybe you should take some profits. Or if you don't want to take some profits, as I did in some of my other videos, which you may want to look at, Sell some covered call option writing strategies, or do a covered call option writing strategies, and at least generate some income and help protect yourself, and you get some money, take some money out of the market that way. Anyways, that's enough for lesson number 4. I appreciate it, ladies and gentlemen, if you could pass this on to other people, and also subscribe to my YouTube channel. Until we meet again, prosper and keep your money green and keep your money safe. Take care now.